Hello, everyone, and welcome to our first charity catch-up event of 2026. It's 2026. It's wonderful to see many of you again, and welcome those joining us for the first time as we'll spend some time looking at the changes in technical areas and that are shaping our charity sector. My name is Claudia Sewa. I am one of the charity managers here at Burton Suite, and it's my pleasure to introduce our speakers today. Ed Marsh, the charity advisor, Josh Kingston, the charity's partner, and Thomas Bacon, the charity's manager. The plan for our session today will be that Ed will begin with an overview of the most recent updates to the Charity Governance Code, followed by Josh, who will give us an insight to the charity's funds and reserves, followed with some key sector updates and highlights from the latest charity fraud report, and an opportunity to go through some questions. We expect to conclude at 1 o'clock today. Please feel free to use the Zoom chat function as we will go through some questions later on. There's a button at the bottom of the screen where you'll be able to put those in, and we'll pick at the end. Captions are enabled for this event, and you can turn them on via the menu bar below. These are automatically generated, but please feel free to use them if they're helpful. Please note that the event is being recorded, although no delegate faces or names will appear in the recording. And then after the event, we'll send out an email link with all the recordings and slides, and we'll really appreciate if you can provide us with some feedback on the event itself, our speakers, or any topics you'd like to cover in the future. I'll now hand over to Ed to kick us off.
Well, thanks so much, Claudia, and good afternoon, everybody. Happy New Year to you. It's still January, so I think I've just got that in under the wire. I hope the new year has started well for you. My name is Ed, if we've not met before, and it's great to have so many people with us again for our charity catch up this month. Now, you might think that your best presents last year were received on Christmas Day. But actually, in the charity world, there was an outpouring of gifts on the sector over the one heady weekend at the end of October and beginning of November. And we had on the Friday night, well, Friday afternoon, we had a new charity statement of recommended practice issued. We had revised Charities Act financial thresholds issued. And then, if that wasn't enough, that was a busy weekend in itself. On the Monday at the start of Trustees Week, we had a new refreshed charity governance code 8 years after the previous one. And so this charity governance code is going to be the focus of our very first session this afternoon. What is it? What does it? How can we use it to help us? And what might your next steps be? But just as we kind of start this, I'm just interested to know what people's experience of the charity governance code is. So there's a poll just coming on the screen, and I'm asking you, what's your experience and awareness of the Charity Governance Code? It might be I've never heard of it, might be I'm aware of it, but our board hasn't looked at it yet. It might be our charities board has discussed it at least once, or perhaps actually you're kind of well on board with it. And your charity has decided to adopt it and are actively discussing it. So I'm going to leave. We're getting lots of responses so far. Thank you so much. And we're just going to just wait for a minute, and real kind of varied experiences. This is really helpful. I'm going to leave just another 10 seconds or so for us to just respond to that if you can. We've almost got everybody, and the bar's closing in 5, 4, 3, 2, 1. And so going to share those results with you so you can see. So we can see that, I'm going to just make that slightly bigger so that I can see the answers. We have 16 people who've never heard of it. We've got quite a lot of people who are aware of it, but not actually discussed it as a board. We've got some who the charities board have discussed it at least once. That's great to see. And then a few of you, your charities have decided to adopt the code, and you're actively working towards implementing it. So a real variety. And I hope that today, whatever situation you're in, you're going to be able to kind of learn something from this session today to be able to perhaps, if you've not thought about it before, to at least be aware of its existence, to read it, to perhaps have a little look at what it says, and is this something our charity might like to start discussing and be putting into practice? Thank you so much for that. So, what is the Charity Governance Code? The Charity Governance Code sets out universal principles of governance for charities, and it really seeks to answer the question, what does good governance really look like? It's important to say here that this code is not a regulatory requirement, that there's no musts involved in this code. What it does is it builds on the musts that are in the Charity Commission guidance, and particularly on CC3, which is a kind of core heart of trusteeship and governance, and it builds on those legal duties that charity trustees must be aware of. The Charity Governance Code is all about how do we cultivate good governance. It was something that was developed by a cross kind of sector collaboration of various sector bodies. The Charity Commission are not involved in writing this code, but they are observers, and they seem to give regular approving nods to the code, to kind of real encouragement to you must look at this and you should look at this. It's a great thing. It is about cultivating good governance. I mean, if it's not required, then why do it? Now, the reality is this, that good governance is an absolutely key ingredient in great charities. It's absolutely key. Good governance is at the heart of great charities. If a charity is to be successful in delivering and having an impact on the purpose for which it's established, then good governance is absolutely the heart of that. And so the heart behind this code is to say, yeah, let's go beyond the bare minimum, but to see situations where charities have great governance. It is aspirational and it's an ongoing journey looking at the Charity Governance Code. Now, bad news for you completer finishers out there. This is not a kind of a tick box. I will discuss it once and then we've ticked that box and we'll move on. It's likely to be that you will never get to the end of saying that you've done and completed the Charity Governance Code. It is deliberately aspirational. It's deliberately provoking to try and inspire those ever greater steps towards greatness. That charities always change and evolve. There's new challenges and risks and opportunities and people involved every day, and so there's a need to keep coming back to the Charity Governance Code. The code adopts very much an apply or explain approach. It recognises that whilst there are principles that are laid out and there's ideas and there's suggestions within the code, every charity is different. Every charity is unique. And so that's why we haven't got this kind of prescriptive action approach in here, but rather principles that help us to reflect on the approach that our charity should take. And the encouragement is, either we might like to say, oh yeah, no, that's something we should adopt and something we should take forward and something we should find a solution for, or otherwise, if for some reason that's not applicable for our charity, then at the very least, let's deliberately reflect on it and decide whether there's a really good reason why this particular principle or this particular suggestion or recommendation is not one for us. And so it very much adopts that approach, and it's in that spirit. So this code, this latest edition, is refreshed in November 2025, and really the whole desire here with this code is that it would be slightly plainer language, it would be more accessible for charity trustees, that also it would take a slightly new approach to thinking through these principles. This code is relevant to every single charity, regardless of its size or its complexity. There is something for everybody here. Now, there are a few little bits where there are extra suggestions for larger charities or those with staff. It's important to think about some of those things where a charity has staff. I mean, the reality is, you may have heard us say before, only 1 in 6 registered charities in England and Wales have paid staff. The vast majority are very small indeed. They're run entirely by volunteers or run entirely by the trustees. And so sometimes some of those governance issues are a little bit different depending on whether your charity has paid staff or not. But this code recognises that good governance is absolutely vital for every single charity, no matter its size or its complexity. Also, charities that decide to adopt this code, they're encouraged to include transparent reporting in their trustees annual report, to include a statement that they are seeking to adopt the provisions of the code. So that's what the code is. Let's just dive in a little bit more to see. So we have this wonderful little diagram of a house, and this is the house of good governance. This is the house of running a charity really well, and this house is built on a foundational principle, and then there are other principles, 8 in total, which some of these might be familiar to you, because if we compare the previous charity governance code with the refreshed one, you'll see there's a lot of similarity here. There's a slightly more upright looking house for a start. The first one looked a bit more like a bungalow. Now we've got 2 stories. Isn't that exciting? But we have similar principles in here. I've just circled the ones where there's been either a real kind of change in the name of the principle or perhaps something that's brand new. And we'll talk through those just in a minute. All of the content has been updated, but there's been some sort of fresh emphasis in new ways here. So we have at the start here the foundation principle, and this is the bedrock of good governance. This is saying this is the principle that trustees will take responsibility for, and they will invest the time and the care that they need to invest to ensure that they understand their charity, to ensure that they understand their duties and their responsibilities. That's the absolute foundation. That secondly, organizational purpose, that's the roof of our house. That it's vital that the trustees are clear on the charity's purposes, and they're clear on how the charity benefits either all or part of the public. It's about being clear that every activity that the charity undertakes is designed to achieve the purpose for which they are established. And the emphasis here is not just that it's delivery of charitable purpose now, it's also in the long term, in the future. And what does that look like? Principle 3 is about leadership. And really, the emphasis of this principle is around the trustees exercising strategic leadership that actually the charity is led in accordance with its purposes and its values. Ethics and culture is a bit of a kind of a new emphasis here. And really, it recognises the importance of agreeing standards and values that shape the charity's culture and behaviour as it does its work. Number 5 is decision making. It's all about an emphasis on making effective decisions that best serve the charity's purposes. So that's all about decision making. Obviously, that varies. What that looks like varies from charity to charity. There's this new section as well on managing resources and risks. The stewardship of charity resources is vital for charities of all sizes. And of course, they steward resources of all kinds, whether it's financial, whether it's people, whether it's reputational, there's all kinds of resources. And also this very much covers how good governance addresses risk and managing risk really well. Equity, diversity, and inclusion is all about having clear and agreed and effective approaches to equity, diversity, or inclusion, or EDI for short. And this is for the whole charity, but this is also in the particular way that the board operates as well. How do those EDI considerations impact the way we as a board conduct ourselves? Note here the change from the previous to the new, from equality to equity. And this is, I think, the desire behind this is to say, well, this is not about kind of a homogenization of everybody on the board. This is not about a kind of recognizing that everybody needs to be the same. Everybody's not the same. There is wonderful kind of diversity. Equity is about making sure that that everyone with their different needs and their different approaches, they have the same fair kind of outcomes rather than necessarily the same inputs. Helpful emphasis, I think. And then finally, Principle 8 is around board effectiveness. How well does the board work together to do the work? How is there a balance of skills and experience, of knowledge and of background? And this very much involves not only optimizing the board effectiveness, but also to take steps to review how well that's going, to review the own performance and take steps to improve that effectiveness. So those are the 8 core principles that lie behind the Charity Governance Code. But what approach does the code take to addressing those principles and helping you to address those principles? Well, for each of the 8 universal principles of the code, there is, first of all, a description of the outcomes that you'd expect to see if you've got great governance. And every principle starts with this picture of what good governance is, and it says it's working well when it's working when. Which I think this is really helpful. I think this is really helpful. It gives this picture that you can kind of compare and contrast with your own circumstances. You say, oh, how do we measure up to this kind of picture of idyllic governance? How do we measure up to it's working when? And then it gives suggestions for how you might achieve those principles and those particular outcomes in your charity's context. And I just want to particularly emphasize the 3 areas that it goes through. And the first one is again a brand new emphasis in the Charity Governance Code, and it's all about behaviour. It's a recognition that so much of what we do in the charity sector, in the charity world, is about people. It's about the way in which we relate to one another. The governance is about working well together as a team. The heart of good governance is not, producing a whole lot of paperwork and policies and procedures. The heart of governance is working well together with other people. The way we relate to one another, the way in which we as a charity overall behave in the sector, but also as trustees together, is absolutely vital. And so it gives a list of behaviours that might result from those principles being enforced. It does then give examples of policies, processes, and practices that might support each principle. And under each principle, there's a bunch of examples of what this might look like in the particular context of the charity. And then finally, it gives there's a suggested list of evidence and assurance of a good governance. It might be, for example, particular policies being in place. It might be particular processes happening really effectively. I think the really important thing is not to treat this as a tick box, not to treat this as a list, a to-do list, but rather to say, how do we let this suggested list give us ideas for how we can evidence the fact that good governance is taking place in our charity? Now, what I like to do is just to give you a bit of an insight into some of the interesting kind of highlights there are in the code, some of those behaviours and those policies and processes that the code gives. And they're not all going to be relevant to everybody. I just want to give some interesting highlights in here. So firstly, on behaviours, here's some interesting things it includes. It says that trustees should dedicate time not only to getting themselves up to speed and learning about the charity, but also they should dedicate time to supporting new trustees. And so good governance looks like not just letting new trustees get on with it and do their best to get up to speed, but we're all part of supporting new trustees as they learn their role. That all trustees invest time staying up to date and are curious and keen to learn. There's that kind of continuous development attitude that trustees would have. That's a behaviour you would see. The board is focused on issues that are of the most importance to the success of the charity's mission. It sounds obvious, doesn't it? But how many meetings have you been in where there's been quite a lot of conversation about the biscuits? Or there's been quite a lot of conversation about what colour the walls of the reception area should be. This is an encouragement for the board to focus on those issues that are of the most importance, the most critical importance to the charity being successful in its mission. Again, you'd hope this is a given, but I think this is really great that this is explicitly stated here, that trustees are respectful and courteous. They're aware of how their behaviour is perceived by others, and especially those from different backgrounds or with different outlooks. That they're conscious of the impact that would have. Here's another one which might sound really easy. Trustees actively listen in meetings. Actively listen in meetings. They engage in what's being shared, and and also that they speak up when they have concerns. These are behaviours that all exhibit good governance, and that trustees take time to, where the charity there's been a failure or there's been a difficulty, that they take time to learn from the mistakes that were made and make sure that there are improvements that are included. Some other interesting examples. All trustees embrace their responsibility to understand the charity's finances and resources. Again, easier said than done for many trustees to understand the charity's finances, but it's a responsibility of all trustees. And then in their discussions and debates, that trustees consider the range of voices that may be absent from the boardroom. The reality is the EDI principle is probably the hardest one for most charities to get to grips with. It's the hard, presents the most challenges. They might have great aspirations around equity, diversion, and diversity and inclusion, but and so it's not always possible. It's not always easy to make sure that we have for example, a representative and a helpful, diverse board. But where that's not possible, what measures are we taking to make sure we are hearing voices that are not present in the room that inform our decision making? Here are some interesting highlights from the policy, processes, and practice sections. That the expectations of trustees are made clear by the charity, that trustees understand the kind of commitment that's expected of them in terms of the time and their input and their energy, the extent to which they get involved in the charity's work. That the board should be defining and agreeing together the values that align with the charity's purpose. Sometimes people think values are a bit kind of head in the clouds. In reality, what's saying here is no, values are really, really important. How we behave, our culture is vitally important to the achievement of our purposes. That trustees involved in operational activities clearly distinguish this from their trustee role. And again, this is no small thing. As I said to you earlier on, only 1 in 6 registered charities in England and Wales have paid staff at all. That means that many trustees are very, very involved on the ground delivering the charity's work. There should be, and it's a real challenge, but there should be a distinction between a charity being a charity trustee being a volunteer outworking the operational work of the charity, and their governance responsibility for control and review and for monitoring. The board makes clear and has very clearly decided which matters are reserved for it to decide. It might delegate certain decisions, certain actions. There might be a CEO in place. There might be a senior management team in place. Wonderful, brilliant. But the board makes it super clear what are the decisions that they make, and then what are the decisions that are reserved for the board to be discussing and making. It's important for the emphasis here, again, interesting emphasis, that the board is alert to and discusses people risks in particular. In other words, particularly is alert to some of those risks around burnout or an over-reliance on one person. They consider those. Again, these might seem obvious, but they are ones that I think are very thought-provoking for how much do we really discuss that in our particular board meetings. The board shares publicly its success and its challenges in progressing EDI aims. Again, in the charities I'm involved in, this is one of the most challenging good governance principles to be working on, and the encouragement to share publicly the successes and challenges in that journey is a provoking and a challenging one to consider. That there's a formal and transparent approach to recruiting new trustees, which should include the advertising of vacancies. We did a session on that a few charity catch-ups ago, and I highly recommend you can have a little listen to that. It talks about the board being an appropriate size and gives an idea of what an appropriate size might be in most cases. It might be typically 5 to 12 trustees. Again, that's not a requirement. It's not a prescription. It's just an idea of what good potentially looks like. That there are agreed processes for reviewing the performance of the board, ideally once a year. That we review the performance of the board and their effectiveness as a board. And that also should include reviewing the performance of the chair. Probably the chair being involved in that, but actually others involved in evaluating the effectiveness of the chair, and also individual trustees. And then where a trustee has served for more than 9 years, the code says, in a in a good governance context, their reappointment is subject to a particularly rigorous review, and it should be explained in the trustees' annual report as well. And finally, uh, when it comes to board evaluation, your annual review or whenever it is, if you're a large charity, the recommendation you should have an external review every 3 years. Um, but that you explain the approach to your board evaluation in your trustees and your report. So those are some of my kind of interesting highlights for you. What might your next steps be? Well, I would say the charity governance code is very readable. It's not particularly long, and it is very accessible. And I'd encourage you and indeed all trustees to read it and to reflect on it. It's found at the charitygovernancecode.org. There's an interactive PDF there where you can kind of jump between sections, and it's very clearly laid out. There's also an interactive website kind of version on the way too that will be more accessible, even more accessible. And then you might like to consider one thing I've seen work really well is boards adopting a bit of a principle by principle approach to discussing it. To perhaps ask a different trustee to get a wider ownership, a different trustee to lead a discussion at each trustees meeting, to have a little read through the principle and to lead discussion about is this what's applicable here to us? How do we measure up to this? You know when it's working when. It might be you want to start with the foundation principle for obvious reasons, but then kind of perhaps pick and choose the journey that you want to go on through. I think with the emphasis on behaviours, it's often quite challenging to point out other people's behaviours. And so adopting a bit of a self-evaluation approach to behaviours, I think, is a really helpful way to go about it. And this is where codes of conduct really come in well. If your charity has a code of conduct for charity trustees, it gives you something of a benchmark to sort of objective measure to benchmark against, and that might be something you want to consider. And do consider external facilitation and support as well. That's something for Burton Suite we're involved in from time to time, but it might very well be that sometimes just having an outside voice coming in and helping these issues is helpful. I hope that's been interesting. I say there's no substitute for reading the code itself. And a bit later on in the session, you might want to ask a few questions about it. But for now, I'm going to hand over to Josh for our next section.
Wonderful. Thank you, Ed. Great. So, yeah, it is lovely to be with you all today. My plan is to think about charity reserves with you, what the charity holds or needs to hold to operate optimally. But before I do that, we're going to go through some of the fundamentals of charity funds, what different types of funds there are, what role they play in the charity, and then where do reserves fit in with all those different types of funds. It's noteworthy that there's a subtle difference in funds if you are a charity reporting on a cash basis rather than an accruals basis. Mostly, I'm going to be describing funds from a full SORP accruals basis point of view, but there is a lot of crossover with what you will need to think about if you're considering cash funds for your charity rather than a sort of full charity funds. So if we're all suitably confused with that opener, I'll move into it. So if you take nothing more away from our time together, then take everything that Ed said and this slide. At the top, I'll walk us through it and then we'll go into a bit more detail. So at the top, we have all of the funds of the charity. However, these are split into two distinct branches. We have unrestricted funds there on the left and restricted funds. So let's start with unrestricted funds. Thank you, Ed. When considering our fundamentals, we love to go back to the purpose of the charity. Unrestricted funds can be spent on anything within the bounds of the charity's purposes and at the discretion of the trustees. Note that a charity established to, for example, relieve poverty, can spend the funds on activities that contribute to that charity's purpose of relieving poverty. An arts charity can spend them on the arts, but neither of those two examples can spend the funds on any good cause. Their funds must only be spent on the particular charitable purpose that the charity was set up to pursue. So where the charities want to do something specific with some of the unrestricted funds, it's a really good practice for the trustees to designate the funds aside for that project or that purpose. There is a power, this is a power that the trustees have to designate funds or to undesignate those funds. Some examples there on the slide. So you might designate funds aside for a fixed asset designated fund. That's sort of holding some funds aside for the value of the fixed assets that are in the charity, in the accounts there. You might set some funds aside for a fundraising initiative that you're doing next year, or perhaps the future purchase of an asset, or match funding a project. You want to just get some funds aside. It's a really good way to communicate what's going on. But those funds that haven't been earmarked as designated, those are the general funds of the charity. And it's that area that we're going to consider when we talk about reserves, or indeed free reserves, a bit later on. So it's such a good slide. We're going to use it lots of times. So we've done unrestricted funds there on the left. We're going to move to restricted funds. So restricted funds are different. These are funds held on specific trusts under charity law. The trusts establish the purpose for which the funds can be used. So a way of thinking about it is that there's a legal ring fence around these restricted funds. The restriction comes usually from outside the charity, and usually comes from the donor. So the trustees don't get to decide how the money is used beyond the terms of the restriction. Trustees cannot restrict or de-restrict funds without the donor, or in rare cases, the Charity Commission's permission. So how do they arise? So we've talked about donors specified. So if I'm a donor, I could give to a charity and say, I want you to use this for this particular project. And that creates a legal restriction around it. It can only be spent on that project. Another way that restricted funds can arise is if the charity does an appeal for funds. So imagine I'm the charity now. If I say, we'd love people to donate towards this brilliant project we've got going on over here, and this is how you do it. And then when people donate towards that you've created a sort of legal restriction around those donations, and that's a way that restricted funds can arise. An odd, sort of rare case again is the Charity Commission direction sort of creating restricted funds. So they specifically instruct you to have that legal restriction around some of the funds that you have. The fact that funds are restricted can create a few issues, such as being overfunded for a project. If you ask for funds and too much comes in, you've got funds to mend the roof, but the roof is already repaired. Or alternatively, if you're underfunded on a project, we want to buy this asset over here, but we just don't have enough. What do we do now? So what happens if, and potentially the charity wants to go in a different direction there. So it's best in these circumstances, and actually at the start of the appeal, really, to get that wording right so that you can avoid those pitfalls. Lovely, thanks, Ed. We've got the funds again there. So we've looked on the left-hand side, unrestricted. We've gone to restricted. And actually, we've been talking just now about restricted income funds. So we're just going to very briefly look at endowment funds, which is the other type there. So very much a short stop in endowment funds. But when most restricted funds are income or revenue in nature, used for the day-to-day of the charity, endowment funds are capital in nature. They are there to support the long-term or the future operation of the charity. There are two types of endowment funds. We've got permanent endowment funds, where the charity doesn't have the power to use the capital that is given, only the sort of income that comes off of it, and expendable endowment, where it's a bit of a unique scenario where the trustees have a bit of power to be able to spend the capital as well. Income generated from endowment funds is revenue in nature as well, and it's recognized possibly in unrestricted funds or restricted funds, depending on the particulars of the endowment. Note that there is one special case to do with income from endowment funds, which is where endowments can be accounted for on a total return basis, but it's not something that we're going to dive into particularly today. So we've covered the different types of funds, but reporting on funds is where all of this becomes visible to the readers of the accounts. So The statement of financial activities, or the SOFA there, where must analyze income and expenditure across unrestricted, restricted, and endowment funds. Sometimes charities also find it helpful to separate out designated funds in the SOFA as well, or maybe free reserves. I think Ed might touch on that a bit later, but those are the things that you must do. Material fund movements must also be explained in the notes to the account. So this would include transfers between funds and the reasons for them. We'll see an example in a moment about that. So in addition to that note, there's also a summary of assets and liabilities by fund that needs to be disclosed, a clear explanation on the restrictions of material funds, explanations on the purpose and planned use of designated funds, so not just restricted funds. The goal is transparency, helping users of the accounts understand what resources the charity really has available and what those funds must be used on. Thanks, Ed. So this is an example of that movement in funds note that you should find in your charity's account. So if you're doing full SORP accounting, so we've got our fund descriptions on the left hand side. We want to know where the fund started at the beginning of the year, what income hit that fund, expenditure, any transfers in and out, gains and losses, and then importantly what funds remain at the year end as well. So just a little visual for you to sort of imagine that note. So there are some fund accounting issues. There's quite a few, and we've seen a lot of them in our time working with all the charities that we do. I'm going to just walk us through them and pick out a few favorites to talk a little bit more about. So we've got inadequate capture of funds as a potential problem, gaps in fund history and paperwork, the treatment of gift aid in regards to funds. So gift aid, it depends on the paperwork and how you sort of made the appeal or whatever. But normally, if the donation is restricted or in a particular fund, then so is the gift aid. So the gift aid follows the donation is the general rule. We've got non-binding donor preferences there. We've got restricted funds by donor or by purpose is sort of an issue. So many charities report their restricted funds by recipient or donor rather than by purpose. But the SORP asks, it says that you should report them by the purpose. Two donors could give to the same restricted project, for example. You could mention both the donors in the description, but the funds with the same restriction should be reported on together. Often taking this action can help with simplifying or reducing the size of the disclosure that you have. So always a bit helpful, I find, to take action there. So number 6 there, the purchase of fixed assets with a restricted donation. So once you have bought an asset that maybe you've raised restricted funds towards, the funds have been used in line with that restriction when you make the purchase, and therefore there's no restriction any longer. You're sort of released from that restriction, except in some very unusual cases where there might be extra clauses or something. So the way you can sort of move out of that restricted fund situation is to do a transfer from restricted to unrestricted funds. So we don't want to be designating funds that don't exist. That's not a good thing. And then just on the next page, number 9, a negative balance on restricted funds. So this usually occurs when a charity spends a bit more on the project than the charity received in restricted donations, which is absolutely a fine thing to do. However, negative funds aren't really a thing. You can dip slightly negative if you know that you're going to receive more restricted funds in the very near future. But generally, negative restricted funds means that some unrestricted funds have been used too. So you can remedy this by a transfer into that negative restricted fund to bring it back to 0, or reducing any restricted expenditure. So number 10, desire for trustee created restricted funds. We mentioned that earlier. Trustees don't have that power as a rule. Accounting for endowment income and expenses, bit complicated, need to tread carefully there. Number 12, vague designated funds, not recommended there. It's good to get specific. And then 13, do the funds belong to the charity at all? Sometimes charities are given funds by another charity or organization to hold as a custodian or an agent for them. It's a bit of an odd scenario, and there are some specific rules around it. But those sort of funds aren't the income or the expenditure, or indeed the funds of the charity. So you need to treat those in a slightly different way. The important thing, if you think this applies to you, is to identify these custodian funds and talk to your accountant about them and work out how best to look at those. So there we are, a bit of a whistle stop through charity funds. But we want to have a little look now at charity reserves. If you could go to the next slide, Ed. So, oh, there it is again. So just a reminder, we're looking, when we're talking about the reserves that we're going to communicate about, we're looking down that left branch into unrestricted funds, and actually we're mostly talking about what's going on in general funds at the bottom left there. So we think that breaking the need for reserves down into 3 areas is really helpful. So what reserves do the charity need? You're going to need some funds that are to do with your operational activities. You need them to fund your day-to-day, to pay the rent, to do the work of the charity. In larger charities, that might be to cover payroll or to make grants from, to fundraise. Another area is holding reserves so that you can be a bit defensive as a charity. What if something happens? The boiler needs replacing, the roof needs repairing, expert advice might be needed out of the blue. It's there to cover the unexpected. Another sort of defensive sort of reasoning is, what if we don't hit budget? What if there's a shortfall in expected income? What if we can't renew the lease? What if we don't win that bid? And then again, what if we need to close? What risks do we need to address with these reserves? Do we need some funds standing by for potential redundancy or dilapidations? Moving out of that slightly negative frame of mind, you might also be thinking offensively. So we want to be able, as a charity, to respond to emerging opportunities. We want to be able to make that purchase, to expand, to bring somebody else on board into the team, to commit to an opportunity or a project or a bid. So having some reserves on hand for that is really important too. Thanks, Ed. So the question is, if we know we need to have reserves, it's how much do we need? So we've got a couple of great myths here. I'll read them out. The Charity Commission recommend charities have 3 to 6 months of expenditure in reserves. A wonderful myth, because it sounds plausible, doesn't it? But it is really dependent on the unique scenario the charity is in. You might not need reserves at all. You might need much more than 6 months of sort of projected expenditure as the reserves that you need. Work out from why you need reserves to what you need, I think is the good process to go through. Now, does that make 3 to 6 months of expenditure wrong for your charity? Not necessarily. What does the charity need? The Charity Commission aren't looking for a particular level of reserves, but they are looking for trustees to actively manage reserves and decide on a policy that's right for the unique circumstances of that charity. Second myth here, trustees have a duty to maximize the charity's reserves. So charities are not profit-making organizations. It's as a charity, you can build your reserves up higher than your needs. You can work the charity to the point where you need to spend the reserves to maximize the charitable good that the charity is doing. You may get challenged on having too high funds from donors or other stakeholders. I'm sure we're all thinking that would be a nice problem to have, but it's certainly not the trustee's duty to maximize the reserves. So, I see. Next slide, please. So these little bullet points here are all a little bit interlinked. You'll need a policy so that you can set a direction for the charity. For example, let's assume that once you've worked your way through your policy, it turns out that we need to grow our reserves over the next 3 years to meet our reserves target. From that, you can use it as a bit of a management tool. You're setting budgets so that you can sort of move the charity from where it is to where it needs to be. For it to be a management tool at all, you need to start using it to communicate. So some of that communication will be internal, but there will also be donors, stakeholders, or other third parties that will be interested to know what's going on. In the accounts, there is a communication piece there about what you want to hold and why. How are you going to execute your plan? In some ways, it matters less sort of where you are with your reserves, but more that the trustees know where the charity is and has a plan to move the charity where it needs to be. We love sort of referring to sort of telling the story as Burton Suite. We like that when it comes to charity. So you need a story to do this communication piece well. Good communication leads to projecting confidence to those stakeholders as to the charity's financial management and future. Oddly, most reserves totals are acceptable to stakeholders, just so long as there is a policy that lets them know why you're holding those reserves and what you plan to do with those reserves or what you plan to do to change them. So let's get a bit more granular about what the reserves are. So again, we're in the funds of the charity, unrestricted funds, and general. So how do we find out what our free reserves are? I'll just explain this slide here. So we start with our unrestricted funds, and then we're going to take a few things away. We've got tangible fixed asset designated funds, and perhaps other funds otherwise committed. If you just pop back to the previous slide, Ed, because we can't get enough of this one. If you take the whole funds of the charity, we're just going to start paring things back until we get to those free reserves. So you're going to take the entire right side of the equation away, take the restricted funds out of the equation. You're going to take designated funds out as well, leaving us with just those general funds. But then some of those general funds are wrapped up in your tangible fixed assets, so you can't really use them. They're not exactly free reserves. So we take those away as well. And occasionally there might be some other commitments like social investments or program related investments as they are referred to in the order sort. Lovely. So in this example here, we're just going to do that in sort of a numbers form. So this is one of the notes to do with funds in the accounts. And if you think about where the free reserves sit in these numbers, we start with the 217,760 at the bottom right. That's the total funds. We take away that whole bottom half of the restricted funds. We take away that designated project of 80,000 as well. And then we take away the tangible fixed asset column of that 484, which leaves us with free reserves. Note there could be more detail behind this, but it looks to me like the free reserves are that 47,600, and that's what you want to be using to communicate about. Thank you. As mentioned before, once you've worked through the why of holding funds, you can go through a process of formulating a target level of reserves. There's no magic formula. Judgment is needed to get there, and that reserves target needs to be something that works for everybody. And it certainly depends on the trustee's risk profile, like what that reserve needs to be. Proportions is just a few tips on how you get to a good target. Proportions are a good measure just near the bottom there. As the charity grows, it will mean that your reserves target will too, which I think is normally a good thing. Worth saying that you're still going to need that sort of pound number to sort of understand what your target is each year. We as Burton Suite, we love a target range, so that bottom point there. If your target's a single number for your free reserves or your reserves, then you're never going to hit it. Whereas if you are within a sort of a range that the trustees are happy with, then you can successfully manage your reserves into that position and sort of do a good communication piece around that in your accounts. Now, the new SORP has a few things to say on what disclosure is required in the account. So I'm just going to pass back over to Ed to give you that detail. Thanks, Ed.
Thanks so much, Josh. The charity SORP 2026, which is in force from accounting periods beginning on or after 1st of January 2026, it makes mandatory what was previously a best practice around reserves reporting. And so it's really important for us in this mandatory world to know exactly what those requirements are, to get that real clarity around reserves reporting. So these are required for all charities adopting the charity SORP. And you need to include your policy for holding reserves. So why are we holding reserves? What amount or target range or proportion do we need? And why do we need that? That justify the thought process we've gone through to come up with that amount. You then must also you must then also state your actual level of reserves, your actual free reserves, and this is brand new. This must be consistent with the accounts. So either the number should be very obvious in the accounts, or there should be a reconciliation either within the notes to the accounts under the funds note, or as a completely separate note. So if your number for free reserves in your trustees annual report is not clearly evident in your accounts, then you need to reconcile to it. So, for example, this example Josh showed earlier on, I think this would help to add a sentence at the bottom saying the free reserves of the charity are, to explain that's what they are in this particular case. Here's another example, another possible approach. That the SORP allows you to designate, for example, the net book value of your fixed assets, or to designate particular that they're earmarked for particular use, so they're not freely available. And so you could actually be in a situation where you present your general funds as your free reserves by designating anything that doesn't fall in the definition of free reserves. So that's one approach. And then this is the really important bit that people often miss out. Yes, number one, you state your policy, your target range. You then state your actual level of reserves, but now you need to go further. You need to explain any variance there is between a 1 and 2, your target and your actual. And then explain any steps or measures you're taking to bring things back into alignment, to bring your level of reserves into the range to which you think is appropriate for your charity, justified by your reasons earlier on. Consider how best to communicate that. This is an example of how you could sometimes a picture tells 1,000 words, doesn't it? Is to just show that our up and our lower target and where we've been in that range. And so you can see clearly that the previous year there was a real need to explain why reserves were higher than the target. So consider ways like that to communicate clearly. And then finally, you also must explain and indicate and a likely timing for the spending of any material designated funds. You can't just use designated funds as a way to window dress your account, to kind of just tuck some money away because we need to be within our policy. They need to be genuine designations, and they need to be clearly explained with their purpose and their timing. And then finally, a new requirement around reserves is that you should include an explanation. If your charity has no reserves or has negative net assets on the balance sheet, you need to say why the charity is a going concern. So again, these were best practice requirements, but now are mandatory for all charities applying the SORP. So it's really important to be clear about those disclosures. Now, I'm going to hand over to my colleague Tom. At our charity catch-ups, we love to just give you a bit of a roundup of latest news and developments. So Tom's just going to kind of run us through a few points before we head into questions. Tom, over to you.
Thanks, Ed. So at each charity catch-up, we seek to bring you a brief update on key news and developments in the sector. So first off, we've heard quite a lot of news from the Charity Commission for England and Wales recently. The Charity Commission has been awarded a 27% increase in their annual budget for 2026 to 2027. Chief Executive David Holdsworth announced last week that the Commission will be recruiting an additional 80 staff this year, which increases the headcount of the Commission by almost a quarter. He commented that this was in the face of significant increase in demand for the Commission's services, including a record number of new charity registrations and a 26% increase in the number of reports relating to concerns about a charity. More staff at the Charity Commission is good news. As anyone who has sought to engage with the Commission recently will know, it does involve quite a lot of waiting for a response. David Holdsworth also acknowledged that the sector continues to deal with huge challenges, not least the continued increases for charities in the cost of employing staff and the impact of inflation on the value of funding they receive. He indicated that quite a lot of the concerns people raise with them about charities relate to difficult and unpopular choices that trustees have to make around how they allocate their limited resources. He made some interesting and reassuring comments about the regulatory approach to such concerns. He said, "Such profound changes are difficult to make, but often vital to secure the future of a charity's work, and the timeliness of such decisions is also vital. The Commission's reassurance here is as follows. So far as decisions are taken in the best interest of the charity, in line with its purposes and following our decision-making guidance, we'll have your back. We won't come down hard on trustees simply because their decision was unpopular or subject to criticism." Secondly, a quick update on charity fraud risk as we look ahead to the coming year. The latest charity fraud report from BDO and the Fraud Advisory Panel shows that while reported fraud incidents fell in 2025, just over half of charities surveyed expect fraud risk to actually increase in 2026, mainly due to continued economic pressures. And the impact of fraud shouldn't be underestimated. In 2025, charities lost between 600,000 and 6 million to fraud, and fewer than a third were able to recover the money. It's not just the financial hit either. Fraud can seriously damage morale, reputation, and trust. Among the types of fraud being committed, most common are misappropriation of cash or assets, payment diversion, and expenses fraud. Crucially, fraud is just as likely to come from inside the organisation as from outside, which underlines the importance of strong controls and clear oversight. Looking ahead, the report highlights cyber-related fraud as the biggest emerging risk. Phishing, ransomware, and AI-driven scams are now a major concern. And while some charities have taken action following high-profile cyber attacks in 2025, around 40% still haven't taken any action at all. The key takeaway for trustees is that fraud risk isn't going away, it's changing. With cyber threats and AI on the rise, trustees need to stay alert and keep pace with emerging risks. In practical terms, trustees should look at strengthening controls, reviewing policies, improving training, upgrading IT systems, and carrying out fraud risk assessments. And finally, if you are constituted as a charitable company, just a reminder that the requirement for company directors and secretaries to have obtained electronic identity verification is now in force. If this is not something you've managed to do yet, do get in touch with us and we can provide some guidance and can arrange for an agent to carry out the checks for you for a small fee. Also, for the avoidance of doubt, as we get a lot of questions about this, these requirements only relate to charitable companies registered at Companies House. They don't apply to charitable incorporated organisations or unincorporated charities. Having said that, it's quite likely that similar requirements will be introduced further down the line for these entities. There will be a link with more information post this event and also anti-fraud training resources made available to you. Thanks for listening. Back to Josh.
Thanks, Tom. God, the director verification is a bit of a pig, so I do get do get on it if you haven't managed to do that so far. And we've just had a quick question, which I'm just going to get to before, as it's very relevant. It says one of our directors currently lives overseas and is having difficulty using the tool online to get his verification code. What do we do? So one of the options that we as a firm sort of have is that, as Tom said, we can sort of refer you to an agent who gives you a link and tries to get you through the steps using their sort of verification software. So I think that's probably the best option. So if you wanted to just email us or go to the contact form on the website, we can sort of set that up for you. There is a little fee, but I think for those trickier ones, that's probably the best way forward if you can't do it another way. Before we keep going down that track, I do have one slide just there before we get to questions. So we've just recently, Burton Suite has started a payroll company, which we've called Apt Payroll. And it's a sort of external payroll bureau that I just wanted to flag up to everybody here. If you want to have your payroll done externally, we think we've got ourselves a really reliable provision here. The guys who are working on it are fantastic, and I'm sure you guys will get on well with them if you do decide to join us on that. So if you're thinking about that or thinking of changing providers, then do get in touch and we'll hopefully help that work. You can get in touch with us straight at Burton Suite or those details on the slide there. Now it's just before 1 o'clock, which is when we wanted to close everything up. So we totally understand if people have things to be getting onto or moving to. We're just going to stick around for a few minutes just to see if we can get through any questions that appear in the chat. But if you do leave us at this time, thank you so much for joining us today. It's been a pleasure to present for you, and do get in touch if there's anything that we can help with.